Hey, Greg.
Can you hear me now?
I hear you. What's up, Matt? You hear us, Matt?
Can you hear me?
Yep.
Yeah, we can hear you a little bit delay, but it's like
Yeah, I can't hear you.
it's like King Kong versus.
Him.
All right, we got you, Matt.
You're
we'll
looking like
you're
a road warrior there, huh?
I think he's just getting it figured. I think he's just
I
getting
don't
it
know why,
dialed
but
in,
I
Greg.
can't hear you guys.
Oh, okay. He can't hear us.
Greg, you hear me okay, right?
I hear you, yeah. Mm-hmm.
Somebody said Greg is a little delayed or Ashley's delayed.
Or both.
I'm having technical difficulties. I can see you guys just fine. Can you hear me?
Fine. Can you hear us?
But I can't hear you. So let me try something. I'll be right back.
Okay, gotcha. All right, everybody. Matt's just going to dial back in here. It's Greg Riley from Sitka USA, Ashley from Materials Exchange. We're just getting everything dialed in, and we'll be ready to go in a second here. We need that elevator music playing in the background, Greg.
Ding, ding, ding. Yeah, for sure.
I wonder if Matt's trying to do it from his phone. It should be that. Maybe
that's what it looked like, Ash. Maybe we should, the really important stuff, which I really need to focus on, is working on my my brackets for Final Four. I mean, that's really the most important.
That starts tonight, right?
Today.
Can you hear me or see me?
Both. We can hear you and see you.
Okay. I just had to turn off my Bluetooth for whatever reason that was interfering with me hearing you guys, but I'm ready to go. Sorry about.
No worries. Well, look at everybody. Welcome to this week in lumber, Matt, we missed you last week. We had Russ Taylor on, and Russ talked to us about the cost of production in a bunch of places. And boy, did I hear the business back from everybody that sells European lumber, how the numbers were $600, $700, $800 $1,000 cost of production. But I think Russ dialed it in pretty much where the main producers are at. And I think, what was it, Greg? He said basically $450 to the ports in the U.S. is still cost for some of these higher, bigger guys. Did I hear that right?
What's cost?
So Russ dialed in the big producers on European lumber, what their costs were, and it was somewhere around where they're hitting the ports right now.
Yeah, I mean, I think it's higher than that on average. I think the lowest cost producers may be, down around those numbers, Ash, but it trends up. It trends up from there. And
because I had some guys call me and say they're $650 cost delivered.
Yep.
Yeah. So Matt, talk to us a little bit about. We're excited to hear about the report from the ground, man. What can you tell us? You actually got out there, rolled the sleeves up, went to reloads, customers. What was your feeling out there?
I've been fairly optimistic about the lumber market for since probably mid-December, thinking we would get a rally, and we did get that rally, and then we got a sell-off too, right? So, and I think, we're probably going to have another rally or two. I don't know that they're going to be as big as what we just saw with a 50% increase over like a 3 or 4 week period, but I do expect some rallies going forward. I think most of those will be related to supply, not necessarily demand. And so knowing that I've been fairly optimistic about things, and then when I went down to Texas, I was still feeling the same way, and I came back feeling a little bit less optimistic about it because of what I saw, which was a lot of inventory and reloads. The ports are jam-packed full over in Houston, and the one thing that gives me some optimism is that the retail customers and the end users in Texas are all keeping like skeleton inventory. So, if you want chances at the batter's box, you're going to get plenty of them, but there's also lots of competition for those orders. And that's got me a little bit more pessimistic about our ability to really rally very far in the market. I think as long as there's ample inventories in secondary hands or in the port, it's going to be, it'll cause these rallies to deflate faster than you expect. So, while I'm overall not negative on the market because of these factors, I just think people should try to figure out a way to operate with a little bit less inventory. If you're going to be a wholesaler or distributor, there's a lot of competition right now for that business. So that's the part that I think it's going to squeeze margins.
So Matt, what you're pretty good dialed in. You drive into those reloads, and you've told me times that there was nothing on the ground, and then there's times where you've pulled in and you can't see it casts a huge shadow because the pile's so high. What was the feeling at the reloads you were at last week?
I went through all the reloads, and they all have more inventory than what I saw in. They have as much or more than what I saw in September.
Who owns that inventory?
I mean, you've got the job shipper crews with delayed job starts because of weather. That stuff's starting to move now. I mean, the ground's dry in Texas, and the weather was 85 degrees. So weather's not an issue in Texas, and there is projects starting, and that product's starting to move. But then there's a lot of secondary wood too. There's a lot of distribution wood and wholesale wood that's parked in a reload or at a port, and the ports are full. As you know, you guys are involved in the business there with your platform. There's a lot of guys listing their product on your platform. So, and not a day goes by that I don't get offered European lumber on my email from lots of different secondaries. So I know there's plenty of wood down there. But
that's a good point.
I think there's ample inventory available to be sold to the retail users.
Greg, just kind of from your area of influence, so to speak, in your area where you put wood in the ground, over in the Northeast and along those ports all the way along the East Coast, what are you seeing as far as relative to what Matt's talking about? Are you seeing something similar? And you'll be down seeing some of those Florida ports in the next week or so.
Doing Southeast port tour in 2 weeks. Ash, I guess, to Matt's point, I'll go back to what I expected late last year was that, we would have a narrow trading range at a relatively low level, as kind of the equal and opposite reaction of the last 2 years. And so I was at a 50% rally there in January in 4 weeks. And I guess that just was like how underbought the pipeline had gotten. And that was that overreaction. I think now we're trying to find, that middle ground and that price is going to be, at or below, I think, the cost of production until production curtailments catch up. And or think it is, which is, like $1.2 million to $1.3 million pace. That having been said, I did see some statistics on, the wood available to the marketplace over the last several years. And, the projections, the projections are that there's still a couple billion board feet more available than is anticipated in consumption, which would at or below the cost of production. And the market is going to rally and sell off based on inventory accumulation and distribution. When the market gets oversold and inventories get too low, we'll get a rally. They'll get squelched, and we'll be in this kind of narrow trading range. I'm anticipating, 300 and March futures expired 10 minutes ago, and let me see. Stand by. They $350 is, that's a long-term, probably unsustainable price for Western spruce 2x4. And then you have the May contract is at $410. So, I kind of look at, hey, when the market's in the 300s equivalent Western spruce, you can buy that. And, if it were to rally, that's a place where you want to sell it. So, the implications are for this is, to Matt's point, is there's going to be competition for orders every day. Retailers can probably keep their inventory, marginally lower than they would otherwise because of that. And, while I'm in the multifamily job site business and salesperson, you never want to tell people not to buy, but, my feeling is that the multifamily guys can probably rein in how much price protection they need and, stay in a 90 to 120 day window instead of instead of 180 plus day window.
That's pretty good information there. You're basically telling them to buy more spot market when they need it. We're working right now on May, June starts, and that pricing is going to be pretty competitive. If I'm starting to quote, if people are asking for quotes now for September, October, there's a pretty good premium in that, which I'm not sure that the market necessarily warrants. But, the customer's always right. And if they want to buy that, then, we want to. Yeah, for sure.
We're going to accommodate.
Let's move to the other topics. Let's
the elephant
put them all
in the
in one big pretty basket. Yeah, let's talk about bank meltdowns, what the Fed is doing in interest rates. Can you talk about that can you sum that up in 2 sentences?
When interest rates go from 0 to 5%, things break. And so things are breaking now. And I read a commentary was like somebody was, I'm surprised, acknowledge the fact that changes in monetary policy, there is a big lag there. The Fed started raising interest rates a year from like right now. They were 0, right? Now they're talking about next week. They're going to be, go from 4.5, 4 3/4 to 5%. That's a huge magnitude move. And so over the next, 6 months, we're going to really start to, we're going to continue to feel the effects of the interest rate increases of last. Really shocked that, SVB probably run by a lot of really smart people, but what the mindset was when they had, hey, we have $80 billion, $100 billion of cash coming in. And I think we should invest it in 30-year bonds yielding 1.5%. I don't know. I'm not that smart, but I could have told you that lending money long-term for 1.5%.
Yeah.
I was reading somewhere, I think Brian Westbury said it.
He's a smart guy.
And I can't speak, but what I pulled one tidbit out of one of his tweets last week, which made a lot of sense. If I read it, it was people were betting on the Fed not raising rates while they were raising them and not continuing to do it. Right. And it was the wrong bet. And if I heard that correctly, did I hear that correctly? Because a lot of their bonds, it seems, were purchased early on in this move too.
Yeah, one of the interesting things, professional investors are, always, are arguably, the smartest guys, but, sometimes the everyday man, and when you think about like the record number of people that refinance their mortgages at, 3% or less, all those people, they're the real rocket scientists today.
Yeah. So, what is all these what's the implication of all this uncertainty over the past week? More uncertainty?
I mean, look, I've got people in the building industry that I trust that know things, and on the one hand, this bank meltdown is maybe going to put the brakes on the Fed raising rates, and so that was actually reducing the 30-year mortgage rates, and that's kind of a bullish thing for the lumber business, right? But on the other hand, as one of my buddies on the builder side said, how much excitement is there going to be to go buy a new home if your banks are melting down? So the head of the NAHB was on Business News this morning, and they put him on the spot, asked him to put his crystal ball out there to the end of the year, and he refused. So that tells you that smart people all over the country really don't know which way to read this thing, up or down. All I know is you can buy cash at $350 and you can sell the May contract at $410 and pick up a $60 basis trade. In the days that I've been doing this kind of business, that's actually not a bad trade. And so those are the types of trades I want to do going forward, where there's a little bit more safety in them. Just buying lumber and wildly throwing it on the ground into reloads and hoping the market goes up $100 next month. Probably not going to be doing much of that anytime soon. I just want to pare things back a little bit and just keep things close to the best.
Yeah, I mean, so let's Ash, maybe to Matt's point, I think that mortgage rates fell by the sharpest amount that they've fallen in a short period of time over the last week. They're still 6.5%. The long-term average mortgage rate in the U.S. over the last 30 years is 8%. I think if you get that mortgage rate, if that drops down to 6% or less, that's gonna free up some some buyers. One of the things we're gonna talk about, and it was a pretty positive report. And the most striking thing that I pulled out of it was the average price that they sold at. Hang on, I want to pull that up because that was like the big number for me. What was that price? Stand by. I'm going to say their average price that they sold went from like $495,000 to $450,000. And I think we've been talking about this. One of the things that prices ran up, we had year-over-year, multi-year increases of 20+%, unsustainable. And they're going to need a correction in that. So you correct the prices and you get people more accustomed to, okay, maybe I have to pay better than long-term average, but not as good as the absolute low of, 5.5 or 6%. There still is a shortage of housing in the U.S. And, there's no excess. This is not 2008, 2009. where we're grossly overbuilt homes for which we've acknowledged is going to stay at a relatively low level is 2.9 months. 5 to 6 months is a kind of a normal market. There's no excess. I mean, the supply of new homes is probably where we're going to get more sales proportionally than in existing homes, which is a positive for our business.
The other thing about home business there, Greg, is that these builders have been very creative with their financing and with their, putting in the extra tile and the graded floors and stuff like that. They're giving people some incentives to go ahead and lock it in and put the money down and then move in sooner rather than later, rather than, like Greg was talking about in 2008, 2009, we had all this unsold inventory just sitting there vacant, foreclosed on and whatnot. We don't have those problems right now. The home builder, I give them a lot of credit for being very aggressive over the last 6 to 8 months and going out and getting ahead of this thing and keeping their business churning, because there is a lot of pent up demand. Think about the people that were locked out of buying a home in 2021, 2022, because they literally couldn't find a home to buy, right? I mean, it was like a bidding war. Like people were paying $100,000 over sticker just to get the house. And, smart people that had time on their side just sat back and waited. And now they can come back in the market and save $35,000 per home and get better options and not have to get into a lottery system. So
that's a good point. I think if Greg, if I heard you right, and Matt, these new home builders, that's where the real bargains and values and buys are going to be. I know, Greg, in our neck of the woods where they're not building a lot of new homes and it's an area where people want to move, the existing homes, when they do go on the market, people are paying more than asking price. There's a whole cottage listing, pre-market listing thing now in those areas. But then you go out to other areas where there's a lot of land and there's new homes being built. There's some pretty good deal. I was on Lennar's site. I was on Toll's site yesterday looking at homes all over the place, right? And you can see quick move-in homes at this price, and a lot of these places are financing themselves, and there's buy downs and there's all kinds of interesting things. And there's some pretty good deals that look like. I love looking through those. What about the other home builders' earnings, Greg, besides Lennar? Did we have any insight to that?
No, I was looking to see with the release, but I didn't get to it, Ash. I'm sorry.
No worries. No worries at all. All right. Well, anything else? Matt, are you back in the office now? Or are you, when did you get back in?
No, I'm in for a couple weeks, and then I'm going to go on spring break with the family at the end of March, early April. But I had a question for Greg before we go. The last time we were all three together on the show, you had intel that the volume of euro was going to drop significantly coming up in the second and third quarter. Are you still getting that same kind of intel?
Yeah.
That's a good question.
Absolutely. The flow is slowing. Bookings are down, and I'm anticipating that at the longer. What's going to happen, in my view, is that if we stay at kind of the prices that we're at now, for the longer we stay there, the more the number and curtailment of U.S. production will expand. And I mean that's what I'm expecting at this point in time, to get that supply demand equilibrium, back where it is for 1.2 million, 1.3 million housing starts. I did have, let me see if I can pull this up real quick.
Follow-up question to that, Greg.
Yep.
When these Europeans book vessel space, how far in advance do they have to book it? Because won't it be reflected in the vessel space, either improving or either increasing, or
you cut out there for a minute.
So how do good to follow up to Matt's question. How do you track that? Can't you just look at vessel space and how much vessel space is booked? And is there a lag, or is there how far out do they book vessel space if you're a European mill?
Well, some contract for the whole year, some contract for spot or a shorter period. You get like hard data on how much is shipping from all of the different European ports to US. There's several. Probably there's probably 2 or 3 main freight forwarding for bulk shipment, and they probably have that number, yeah. But I don't know how to get it. But here's the stat I wanted to get to. So in 2020, the supply demand. So 2020 lumber available to the U.S. market, 50.5 billion board feet. Demand was 51.3, so we're minus 700 million board feet. 2022, 52.3, so we were minus 300. So over those 2 years, we were short 1 billion board feet, which is why we had the rationing that we had. Last year, less lumber available. So the estimate for this year is 2022. I gave you that, right? No, 2022, 52.9 billion was the supply, and the demand was 52.7. So we were oversupplied 200 million board feet half of the year. The estimate for this year is going to be 52.4 billion available, and demand is only going to be 47.6, which is an excess of 4.8 billion board feet. Now, I'm going to say that in the end of the day, those numbers are going to be closer, that the lumber available to the U.S. market will be less than 52.4 but you think about that, 2020 it was 50.5. So that's, that's 2 billion board feet. And, this report is projecting demand at only 47.6. So I think both those numbers will come together. But the main point is that there's still projected more lumber available to the U.S. market than the anticipated demand from this particular forecast.
Yeah. It's
a lot. That was a lot. That was a lot of numbers. I think I was falling asleep while I was doing it.
Well, Greg, what I find interesting on that is if you were not in the lumber industry and you were listening to this, how close supply and demand actually is. 4 billion board feet sounds like a lot. That's 4 mills or 6 or 7 medium-sized mills, right? That can change pretty quickly.
Here's the deal. The market seeks equilibrium, and at the end of quote unquote, I hate this thing, but at the end of the day, most every year, the lumber available to the market and the lumber that was consumed by the market being how much inventory, starting inventory versus ending inventory. And, listen, you remember in 2020 and 2021, random people off the street coming up to us, lumber articles everywhere. There's a shortage of lumber, blah, blah, blah. My statement was always the same, as I know yours was, Matt. There's no shortage of lumber. Anybody can get any lumber that they want. All they have to do is pay for it. We allocate supply. I'm going to say, there's no excess of lumber right now. We're going to reduce supply based on price.
Yeah,
that's what the market's doing.
Yeah,
and I'll leave you with this. If you just go, I don't want to sound totally bearish or anything. Just talking about inventories at the beginning of this thing. My overall view of the market on March 15th is that going into the second quarter, and historically, demand goes up, right? Just seasonality is in the favor of demand. And at the same time, we're going to see less euro. And we've already got announced curtailments from some of the majors in Canada coming. And if these prices hold, I guarantee you we're going to see more curtailments announced from other people. So I'm not negative on the overall market in the long run, like over the next 90 days or 120 days. I just think right now is we're in the soft spot. And so you got to run your business accordingly, right? You got to pay attention to the facts on the ground.
Hey, Matt, real quick, obviously, record rain and snowfall. California reports are obviously that, the business down the I-5 corridor has been really slowed. Are you starting to see that turn around at all on your end, or is that still a few weeks off?
We're actually having a pretty good week of sales in the office from the mills up and down the I-5 corridor for the first time in a while. We're also getting some inland west orders for a change. So, it's perking up a little bit. It's not like we're raising prices, or we really don't want to build long order files at these levels either, but we're trading, and there's plenty of trade going on. And the numbers that we're having to take to move wood is like, instead of, these $40 and $50 counters that people throw around when they feel like they got us pinned back, we're not doing any of that stuff. It's all being done at like 5 to 10 off. And then I sold a bunch of lumber in Texas yesterday and the day before, basically, within $10 of what I wanted for it. So I don't think price is really the issue right now. And I do think demand is starting to increase. The weather is starting to get better. It's going to be 65 degrees here tomorrow in Portland, and it's going to start drying out. So, I'm going to start practicing golf again, buddy.
There you go. There you go. Well, I head back to Chicago on Friday. I want to get back there so I can enjoy 6 weeks of winter still.
We'll see you when you get back Friday. And Matt, I'll look forward to talking to you too. Well, everybody, thanks for showing up for This Week in Lumber, and we'll look forward to doing it next Wednesday at the same time.
Yeah, great. Thanks, man.
Bye, guys.